Today we're going to do the question in the workbook, page 51, question 7. Now, I have put on the left side of this screen the house of yearing, the list of balances that were extracted from the question itself. Now, it's always the question actually requests that we prepare a statement of financial position as at 31st August 20x8. Now, on your right, it's always good to have an idea of how your final answer will look like. Now, your final answer will have 5 categories of items that is listed. One is the non-current assets, second, current assets, third is owner's equity, fourth is non-current liabilities, and finally, current liabilities. So this will be how your statement of financial position will have items listed. Now, let's go back to the question. Step 1 of doing this question is to categorize each of these items according to the 5 categories that we have just mentioned. Now let's begin. Bank overdraft is the obligation that the business owe to the bank, okay, that is expected to be repaid within a year. So it's classified as current liability, CL. Cash in hand is a current asset. Trade receivables is easily convertible to cash, so it is a current asset. Now, loss for the year, just like profit for the year, belongs to equity, but it's a negative equity because it reduces your capital. Now, next is capital on the 1st September 20x7, which is the first day of this financial year, ending on 31st August. So it is a beginning capital classified as equity. Drawings is taking out capital from the business by the owner for personal use. So that is also part of equity. Inventory is a current asset. Trade payables is a current liability because it's expected to be repaid within 1 year. Fixtures and fittings is a non-current asset. So here we got our 5 categorization items, all categorized according to the 5 different categories. So let's begin to put the correct items into the statement of financial position according to its categories. Let's begin. Now, for non-current assets, there is only one item for this particular question: fixtures and fittings. So we do not need a subtotal column. We use column K to record this amount, 6514. Now, then for current assets, we have 3 items: cash in hand, trade receivables, and inventory. Cash in hand, we have 3421. Trade receivables, we have 7561. And finally, inventory, we have 5485. Now with that, we do a subtotal and we get our figures on the total current assets, 16,467. Now, together with the total non-current assets, we will have our total assets value. So let's add these two subtotals together, and we have a total assets of $22,981 for the house of earrings. Now here we now come to equity and liability sections. Under owner's equity, there's only one item called capital, as always, but we will have 3 items that we need to be calculated to arrive at the capital. Now first, it is the beginning capital. Now this beginning capital is 17,072 here. Now then we need to add to the profit for the year, but in this particular example it was a loss, so instead of adding, it actually reduces my ending capital by 7561, and that's why we subtract. And finally, coming to the last item on equity is drawings. Drawings is a reduction of capital, so it is subtract $684. So because there's no subtotal to calculate, we will use the column K to record this amount. So 17,072, subtract the losses and subtract the drawings, and we have an amount of 12,806. Now for this particular question, we do not have non-current liabilities, so you can remove the category here. But we have current liabilities. So current liabilities, there are two items. One is bank overdraft, and the amount is 2655. And the next item is trade payables, and the amount is 7520. Now the subtotal for this, then we need to compute, and then we will record this subtotal. Total current liabilities is 10,175. Now therefore the total equity and liabilities is owner's equity, add non-current liability, but there's none for this question, add current liabilities, and we'll get our final figure, 22,981. Now a reminder, total assets must always be equal to total equity and liabilities to comply with the accounting equation. Now there we have it. We have completed the answers for question page 51, question 7. Hope it helps you.